The question is that, you know, how would you pan out this kind of privatization program?
I think Sri Lanka first needs to come up with a proper public-private partnership policy work, which the country doesn't have. And this is a weakness in many of the developing countries. So the regulations and the policy needs to be set out first, right? And then we have to have a justice system all cleaned up. Because if there is going to be corruption, it needs to be answered for. It needs to be able to, you need to be able to monitor it. So our policies need to be set up proper, which it has not been done. So even at a public-private partnership policy, this PPP framework, which is, I think, I would say most of the developing countries are struggling with it, because most countries the governments don't want to give up on their state-owned enterprises. And when we have to privatize this, there's a lot more to think about on the structure of it, on the returns of it, on who's going to oversee, who's going to make sure there is no corruption happening here. So that I would say it's not again it's going to be a challenging process. And then with Sri Lanka also, with the privatization, we've seen that the trade union actions have been very strong over the past years. Some of the policy changes, some of the reforms that Sri Lanka had to take had been stopped because of trade union actions. So all these need to be, and I think people just need to understand that some of the trade union actions you can't always keep pushing for short-term kind of benefits in the expenses of our long-term recovery. So at the moment it's going to be some short-term pain and hopefully go for a long-term recovery, so we don't fall back into this situation again.
Guest speaker with us. And to introduce the speaker, I would like to warmly welcome Dr. Rohantha to take over.
Thank you very much, Ruth, and appreciate sincerely. I'm not sure in which platform you have joined, because we are on 3 different platforms. We have with us a very, very eminent person. He specializes in macroeconomics, trade and investment, and consultant at the World Bank covering Sri Lanka and Maldives. Prior to joining the World Bank, this lady worked as an economic research analyst at Moody's Analytics Knowledge Services, currently Equity Knowledge Partners, supporting the leading international investment banks covering capital markets, regional and country macroeconomics, housing markets, the global oil market, and the renewable energy markets. She obtained a master's and bachelor's degree in economics from the International Islamic University, Kuala Lumpur, Malaysia. Ladies and gentlemen, I'm actually honored to introduce to you Karishma Sheriff, consultant macroeconomics, trade and investment, World Bank for Sri Lanka and Maldives. And she will be making a presentation on her personal thoughts, and it has no links to the organization she serves. And I'm really honored to have you, such an eminent personality, amazing acumen. I just went through the kinds of portfolio of you. Once again, it's amazing to have this very eminent person with us, Karishma Sheriff, who's expert on macroeconomics, trade and investment. Over to you, ma'am.
Thank you very much, Dr. Rohantha, and thank you very much to you and the Pitt Institute for inviting me today. So let me get on to this, and I'll share my screen on the slide. Okay, so as Dr. Rohantha mentioned earlier, whatever I present, my opinions and views on this presentation is of my own, and this doesn't necessarily represent the views and opinions of the World Bank. So I need to put it out there before we start. So let's get into it. Because this is an economic presentation, you'll see a number of charts, but I'll try to make it interesting and simple as possible. So, and I'm also expecting feedback from you and discussion. This should be open to discussion, and I would like to hear the students and other attendees' opinions as well. So getting right into it, what we see is that the Sri Lankan economy has contracted starting 2022. We were also in a slow pace in 2020 during the COVID-19 pandemic. There was some recovery in 2021, but now in 2022, we are actually in a economic negative growth. And this has been, the economy has been, I would say, dragged down by all three sectors. So agriculture, not surprisingly, after we saw that there was a ban on chemical fertilizers, there was the agricultural outcomes and outputs have been low in Sri Lanka. But then also, since recently we've seen the industry sector, which is majority manufacturing, also has come down. And that is also no surprise because we have a fuel shortage. We find it difficult for people to attend work. There is also been a shortage in inputs, and all these have contributed to the slowdown in the industry sector. And then services, of course, with the slowdown in tourism, so travel and transportation services have also come down, and all these have contributed towards a contraction in economic growth. Now let's backpedal a bit to see where and how we got here. So I'm now focusing on the government side of the economy. So historically, Sri Lanka has always had a higher expenditure than its revenue. So we've been spending more than what we've been earning. And this has been true throughout history. But then in the recent past, we see that gap widening. And about 90% of Sri Lankan revenues government revenues come from tax revenues. And at the end of 2019, there was an announcement on tax reforms. So basically, tax rates were reduced, and then there were also some tax exemptions. And this kind of brought down the revenue of the Sri Lankan government. And that is what I've shown with that circled part. And then also, of course, with the increase, with the COVID-19 pandemic, the government expenditures also increased because there were some expenditures on the support for social security. There were handouts for some of the earners, low-income earners, people who lost their jobs. And with all this added up, the gap between the revenues and expenditures have increased over the last 2 years. And that therefore, this also increases our budget deficit, what you see on the right side. And when there is a gap between a revenue and expenditure, that means the government has to finance this gap somehow. And what would the government usually do? They would usually go and borrow money. And the Sri Lankan government has historically borrowed from foreign sources as well as domestic sources. But then in the recent past again, our net borrowing has primarily been from domestic sources and not so much from foreign sources. So when I say foreign sources, the government would issue international bonds, and these are those dollar or euro bonds that we need to pay up. And in the domestic market, the government would issue treasury bills, treasury bonds, and these would be usually invested by commercial banks and then investment houses. So in the past 2 years, you see there was this rapid rise in need of budget financing, and this has been financed through the domestic sources, and that too rapidly and mostly by the central bank. Now, why did this happen? So for until about few months back, the central bank had their interest rates capped, meaning, for example, let's say the central bank says we will not go beyond 10% of our policy rate, that is the general interest rate, right? And then when there are bonds and treasury bills that are issued by the governments, those who bid for these bonds and bills would usually bid it also with the return that they expect. So for example, they'll say, I would like to buy, let's say 100,000 rupees of bonds at an interest rate of 12%, for example. But if the government or the central bank has decided they will not go beyond 10%, then these bids get rejected, and the bids that are of the lesser interest rates get accepted. But if the market feels that they need to be compensated more, they will of course keep bidding at a higher rate. So what happens to these bonds and bills that do not get sold in the market? Then the central bank buys these bonds and bills, and then they have to release this money to the government. And because the central bank is not really a revenue making institute like a normal bank that you know of, this money has to be created or printed. So this is what we generally say as money printing. And this kind of money printing has happened rapidly, starting, I would say, early 2020. But then also, why haven't we gone to the foreign markets? Now, this has happened because the cost of foreign borrowing suddenly increased in 2020, right? In general, that's what you see in the red dotted line is the weighted average yield of outstanding bonds, which used to be around 5%, had suddenly now gone up by about 4% to about 20%. And those bonds that are maturing over the next couple of years in 23 and 2 in 24, their yields have increased rapidly. So what does this mean? So generally, when you look at any kind of bond, the yield or the interest also represents the risk that an investor has to undertake by holding these bonds, right? So the higher the risk, the higher the yield that these investors would expect. And this is what exactly happened with the Sri Lankan international bonds. It became costlier, but it didn't happen suddenly. It wasn't a coincidence. I bought this chart back, which I spoke about earlier, where the government revenues and expenditures widened. So in 2020, when the government decided that they need to cut down, or they would go with less taxes or cut down on tax rates, this gave a signal to the international market that the Sri Lankan government would not be making enough money. And therefore, they view, the investors and the international bond market view this as a higher risk, that their bonds will not be paid back. Therefore, if the Sri Lankan government wants to borrow from the international market, they would then have to pay a high interest rate. So this became extremely costly for the Sri Lankan government. Therefore, the Sri Lankan government then decided to mostly borrow from the domestic market. And of course, with time, you also see I have also included the downgrading of our bonds by all these international rating agencies. So when they read the market, when they see the risks, they keep downgrading. And as the downgrades come also, then again, the investors become a bit more spooked, I would say, and they would then again demand for higher rates. So the international bond market then became expensive for Sri Lanka. And at the moment, of course, we are in a default. So we cannot access the international bond markets for any of the borrowings. Then we will come into the external sector. Again, external sector to Sri Lanka has always imported more than we exported. The trade balance has been negative. And this is not necessarily unique to Sri Lanka. It's not necessarily a bad thing. Even the US goes at negative trade balance because Sri Lanka is an export-oriented country. We need to import our inputs. We also need to input oil, which historically takes about, I would say, about 1/3 of a total import bill. And then we also had some capital projects that were going on, highways that were built, buildings that were built. So there was a lot more to import. But then with this, what happens is we need to find more dollars to finance our imports. So if the export financing is not enough, then we also have to find money in other ways. On the services side, we have tourism, and then we have the inward remittances of foreign workers. Now, tourism also took a hit, I would say, following the Easter Sunday attacks. There was low tourism. In 2020, it was the pandemic, gone into 2021, and now we are in 2022. So tourism arrivals for Sri Lanka has hardly seen a recovery. And inward worker remittance also started going down from about the first quarter of 2020. This too happened because the central bank decided to fix the exchange rate. And when you keep an exchange rate fixed, and when the market feels that they deserve more rupees for a dollar, so a worker feels probably that the 360 rupees that they receive now in the formal channels are not enough for their earnings, they then try to find alternate ways where they can earn more rupees for their dollar. And this is what you now hear, like, of the undial system, of the black market system. So these are not, I would say, the proper way to do it, but then this is what the market asks for. So because of that, now you see that the worker remittances have fallen about 50% less than what we used to receive last year. So with all this, what has happened is our foreign reserves have drastically fallen. Right, you see, because Sri Lanka still has to import, Sri Lanka also had to pay back maturing debt, our bonds. They also have to keep paying interest on the loans that they've taken, bilateral, multilateral trade, all these kind of borrowings that Sri Lanka has taken. So our reserves now kept on falling, and it started falling rapidly starting the end of 2020. And the number of months that import can be covered is what I've written. It's what is seen in these gray pillars. So what I've done is taken the average import of the last 12 months, or monthly import. So roughly Sri Lanka needs about $1.7 billion for 1 month of import. And then we divide it by the gross official reserves that are available currently. So currently we have about $1.8 billion of official reserves, but of this also 1.5 billion is a Chinese currency swap. Now we cannot make use of this Chinese currency swap because they have put in certain regulations. And one of it, if I'm not mistaken, is that we need to have import coverage of about 3 or 5 months. So at the moment, our import coverage on the official reserves, including the Chinese currency swap, is about 1 month. But then excluding the Chinese currency swap, we've been running at about $200 to $300 million in the past few months. So you're welcome to do your own calculation. If we need about $1,700 million a month, and we have only about $300 million with us, then you can calculate, for how many days is these imports going to be sufficient. And then with all this, what has happened is Sri Lanka is also now experiencing extremely high inflation, and these are also driven by domestic and global factors. So domestically, you see there's been food inflation. The overall inflation was mostly driven by food inflation starting 2020. And this is because domestically, we also had a shortage in our food output because of the fertilizer issue. There was agriculture wasn't picking up, and we saw food inflation. But then later on, 2021, we also see there is this push in on food inflation. And this coincides with the rise in oil prices. Plus, because our exchange rate has been now very weak, so per dollar, we had to keep paying a lot more rupees. That is also feeding into overall inflation. And so domestic as well as global, as well as this policy that the Sri Lankan Central Bank and the Sri Lankan governments have undertaken, all these have contributed to a very high inflation in Sri Lanka. And then, having all these issues, we are moving into a world which is facing stagflation. Now, what is stagflation? Stagflation is a situation where there will be low economic growth and very high inflation. Now, I've taken this out of the most recent World Bank Global Economic Prospect report. So you see, even the World Bank has kind of downgraded their economic forecast. So in January, they were expecting about a 4% growth in the globally, but now they think it's going to be about 3%. So all these, even in the advanced economies and developing economies, we see that the outlook for economic growth has been declining. And then the developed world is also pushing up on interest rates. Why is this happening? Because even across the world, there is high inflation, and how these countries are battling this is by increasing interest rates and thereby trying to bring down the demand side of the inflation. And these two, their policy expectations are now rising month for month. So the World Bank expects by March 2023 that the policy rate of the United States to be about 5%. This is the most recent outlook, whereas last month they thought this would be just less than 4%. So all these indicate that the developed countries are expecting high inflation. and a low economic growth. So this is the kind of global economic situation Sri Lanka is heading towards, while we are having our own challenges. And just to speak about that a little bit more, because this is something we need to highlight. So Sri Lanka is heading into a world with high global uncertainty. So one thing is the Russia-Ukraine war, where we are not sure which way it'll be heading. And this is one of the main reasons why the oil prices have gone up, prices of wheat has gone up, and then also how fast the Chinese economy is going to recover, because most of the global inflation, most of it, what you're seeing is the supply side or supply driven inflation. And the slowdown in the Chinese economy because of the COVID-19 pandemic, they're still under lockdowns. We do not know when they're going to recover at a normal pace. So all this would contribute to heightened global uncertainty, and this would then lead into inflation, which I spoke earlier. There is domestic as well as global factors that are feeding into Sri Lanka's inflation. So hopefully now that we have got probably getting a fertilizer issue sorted, hopefully so the domestic food inflation will at least hopefully come down, but it won't happen overnight. As it is with agriculture, it takes some time to get output. It also all depends on the weather patterns. So the inflation rate, we can expect inflation to keep rising globally as well as domestically. And then with all these challenges, then globally as well as in Sri Lanka, we can expect a slowing economic growth or even a growth contraction, meaning going into this year and next year, we would most likely see negative economic growth. And then we also spoke about the gap between government revenues and expenditures. And this is something now the government will have to get under control. And so how could you do this? You have to then increase your revenues and reduce your expenditures. But the Sri Lankan government, I think recently they announced an interim budget, and they have also increased VAT rates, they have increased income tax rates and corporate tax rates. So hopefully all these measures will contribute towards revenue growth. While these are very difficult, I would say these are very sensitive and very difficult decisions to make in the current situation when there is high inflation, when people are losing their jobs. And on top of that, when you have to pay high tax, it's obviously not going to be very easy. But then it is also necessary if we have to come out of this situation. And on the expenditure side, the government then has to decide on which expenditures they are going to cut down. And I think the government has already decided that there would be certain capital projects that they are going to slow down or not invest in right now. But then also the larger chunk of government expenditure comes from the public sector wage bill. And I've seen that there are some moves from the government, they've allowed public sector workers to take a no-pay 5-year leave if they are interested in going abroad to work, or if they want to go on study leave. So temporarily, at least this would reduce, they're hoping this would reduce the wage bill, the public sector wage bill from the expenditure side. But then I'm really not sure how successful this program is. I've not seen any information on how much public sector workers are interested in taking this no-pay leave and going abroad. But if anyone has that information, please do let me know. I would like to understand, what their opinion and attitude towards this 5-year no-pay leave program that the government is pushing for. And then on the other side of the expenditure is also where the government has to then support the most vulnerable of the population. So there are the pension owners who find, because of inflation and because of increased taxes, that they would find that their purchasing power has reduced. And then there's some of the earners or the low income earners who need support. And also there are certain social factors that the government will have to consider and then increase expenditure on this side to support these kind of vulnerable groups. And then we also, as a country, we need to earn more foreign revenues or dollars. And this could be done by growing our exports or diversifying our exports. But then we need to remember that we are going into a challenging global economic situation where most of our trading partners, our primary trading partners like the US and the EU, are expecting a slower economic growth. This means demand would also reduce. And therefore, it's going to be challenging for us to increase our exports in this kind of economic environment. And then regionally too, we have to consider the competition that we have, like Bangladesh, and there is Philippines and Vietnam, who have really stepped up on exporting textiles, and this is giving us also, I would say, a significant challenge. And with all this, finally, we need to also consider the social aspect, and we would most likely see an increase in poverty rates in Sri Lanka as people lose their jobs or lose their income, or the income that they're earning is not sufficient to cover their basic needs. And with all this, then the government, as well as I think other multilaterals like the World Bank and the ADB, they will all come in and as much as possible then try to support these kind of vulnerable groups to get out of, or to support them until Sri Lanka comes out of this situation. And now I know many people would like to know how long it would take for Sri Lanka to come out of this situation. There is even in that there is uncertainty of that, because while we have come up with, we have a staff level agreement with the IMF to provide 2.9 billion that has still not gone to the board. And the success of that heavily depends on how successful we are in trying to get a debt restructuring program going. And for this, our main creditors, that is India, China, and Japan, have to agree on a debt restructuring program and the Paris Club. So all this would take time, because each country would have their own opinions. They would like to, they would try to negotiate. And they have the internal politics and the economic situations as well. So this usually would take some time. So there is no timeline. Even I think the IMF cannot tell us what that timeline is. So it's going to be, I would say, a slow process. It's going to be a few years of challenging times for Sri Lanka. So I wish I was able to be a bit more upbeat, but then we need to understand the reality. And this is where we are now. So that's about it from me.
Thank you very much, Karishma, and that was amazing, quick snapshot of where we are going. I think what we could do is maybe we could exit the screen, and then so that we could see you. Oh, right, lovely. So the heaps of questions coming from different quarters, Karishma. The first one is coming from Husni, who's an MBA student at APIT, and he's asking a very interesting question. He's saying, is there some way that we could have avoided being bankrupt?
Well, yes, I think, like I said, this is a long-term structural issue which we have. We have been spending more than we've been earning in both ends, domestically as well as in import and export. So, but this is a matter of then managing our revenues. So I would say one thing is reducing the tax income wasn't correct at the time. Of course, you could not foresee that there was going to be a pandemic also happening. But then to suddenly increase your government revenue significantly would definitely, send negative signals to the international market. This all has contributed. But I think personally, this would have eventually caught up with us. We cannot, as a country, keep running by borrowing and keep going this way. So if we do need to make some, we do need to make some drastic changes, structural changes. But so I think this is the time for it, because we do not have any other option at the moment. We are pushed to a corner, and these are going to be very difficult decisions to make, very politically unpopular as well. But then it has to be done. So if we had to avoid this, yes, we had to make a very tough political and I would say policy-wise decisions and changes.
The Shalini, who is again an MBA student at Staffordshire University, she's saying, we studied in class how even a country like Turkey went into a issue, and then there was a leader who came in, a new leader who also started driving international trade and trying to see as to how they could connect with the global market. But then he started stifling human rights, and then subsequently the EU had to close its door. And then we had a situation in Turkey where they again got into a balance of payment issue. So is there a lesson we have studied in class saying that there is a lesson to learn from Turkey to Sri Lanka? And the question she's asking is that, is there any other country which is similar to a Sri Lankan footing in the verge of having a liquidity issue?
Yes, I think more than Turkey, I would say Lebanon at the moment is having the same issue. And they are even socially, they are, we see very much similar trends of what's happening in Sri Lanka, small businesses breaking down, people trying to leave the country. The government keeps giving handouts, trying to, help the vulnerable, but this doesn't really help, right? Because, I mean, it would help to some point, but how much more can a government who's already kind of bankrupt keep giving out? And for the Turkish situation, I think while yes, there was these human rights considerations there, their policies are a little bit more different because their leader heavily believes in a, I would say, an Islamic economic outlook. And he believes, therefore, that interest rate is not the way to curtail inflation or to control the economy. So while they are also having hyperinflation, they are not increasing their interest rates. And there too, because of difficulties, the government has been giving handouts, and now that is kind of creating a problem in Turkey. But I would say we are more similar to Lebanon at the moment, and we hopefully not head towards somewhere like Zimbabwe or Argentina, where they went into default, they could not get into the structuring program. They keep going to the IMF, but they don't keep up with what's agreed with the IMF. So when these things happen, the recovery takes time.
The question coming from Priscilla is that in class we analyzed the numbers and it came to that almost twice a tranche of about $4.5 to $5 billion was requested by countries like Argentina. And countries like Greece had gone up to a funding requirement of about $25 billion from IMF. Sri Lanka requires only just 2.9 billion. Does the quantum have an impact to the money that the IMF can release out, or is it much more policy driven?
I think it's much more policy driven. I'm not really sure how they actually calculate on, which country deserves how much. I don't know, maybe they probably have a ratio on this, but obviously 2.9 billion is not going to get us out of this situation just like that. We have about 50 billion in debts outstanding. We need 1.7 billion to just import 1 month of goods. So what they're giving is just, it's kind of a support. It will be dispersed over 4 years. We are not going to get it overnight. And if you are to get this money also, what it means, there are certain checks and balances that the IMF puts forward that Sri Lanka will have to achieve. So what you see, I would say, part of this increase in electricity bills in trying to privatize SOEs that are loss-making, increasing of tax rates. These are all part and parcel of what an IMF program would require. they will have to keep increasing interest rates. And I would think eventually we will have to float the dollar again. We can't keep it stuck or holding as it is now. So what would happen is once we reach this kind of, we achieve the certain targets, then the IMF would then release this money for us as some kind of, I would say, budgetary support. But what happens with an IMF program coming in, this gives this gives confidence to the other kind of multilaterals as well as, our bilateral lenders. So when the IMF says they are interested in helping us, they will oversee that, structurally we are willing to make a change as a country. Then there would be some interest in these lenders to maybe discuss a restructuring. And as I know that even the World Bank or the Asian Development Bank, they will work along with the IMF, then trying to support some of these structural and policy changes, and then helping, with some of the social kind of spending that needs to be taken up.
Question is from Parami, and she's saying, today's reports say that 4 out of 10 families are in poverty. And World Bank says that almost 40% of the households will be in poverty by December, is what the reports say. If so, there can be absolute civil riots.
Yes.
In this context, how does a country manage its survival?
This is absolutely true. This is absolutely true. And with the increase of poverty rates, it's seen even you see in Latin American countries, what you see is a rise in civil uprising, because people are now unhappy, right? They cannot afford the basic needs. And what also people sometimes, expect is that whichever government, whichever ruler comes into power, that you have like an overnight kind of solution. But Sri Lanka is in such a situation that there is no overnight solution. It's going to take some time, very slow recovery. And of course, this means people are not going to be happy at the moment. People are not happy about the increase of the electricity bills. Or the taxes going up. People are of course not going to be happy. So the civil unrest is just something very serious. It could happen, and I shouldn't be surprised if it happens. And we saw this kind of happening, which made a change of this government. Because what happens is then people get unhappy, they want a change of rulers, then they want someone new to come in and try to solve this for them as soon as possible. But what I could say is it doesn't matter who comes into power in Sri Lanka, they will all have to make very difficult, political sensitive, politically unpopular decisions if we have to get out of this situation, because we have no other option.
There's a question coming from Isurinder, and he's asking, how does this whole aspect of investment come to play when you know that your ratings are poor and you have very developed markets like Vietnam, Cambodia, Bangladesh, who are much more stable? How does that work in this game?
Yeah, of course, because at the moment we are locked out of international markets. We are in default. We are in a high, our ratings are also at a default rating. This means even if Sri Lanka wants to, we would not be able to access the international markets. And you're right, from an investor's point of view, why would they want to put their money into Sri Lanka, right? When they have these other countries which are relatively stable, which they can ensure somewhat that there will be good returns. So why would they do that? So it's all on the risk factor. But at the moment, Sri Lanka is just locked out of international markets. It's not something we can even consider for the next couple of years, at least. So at the moment, what we could do is just try to get this debt restructuring done. And Sri Lanka will then have to depend on friendly governments to give us some money, not in the capital markets, just like what India has been doing in the past few months. But then each and every country has their limits as well. They are also facing these kind of global economic issues. At one point, Bangladesh came forward, they gave us some money. But now even Bangladesh is trying to talk to the IMF because their foreign reserves are falling rapidly. So there is no way they could give us that money. And if India is to come back to help Sri Lanka, even they are facing these kind of internally also there are politics they have to consider. They can't just give out money to any country, and we are stuck in the middle of, even regional politics. So there is so much that Sri Lanka needs to think about to balance this out.
It's a question coming from Asuri, an MBA student, and she's saying there's a global recession which has been speculated because of the energy costs due to the war. And wouldn't this have a detrimental effect on the Sri Lankan recovery?
Yes, I would think so. One thing is because this is going to put a heavy burden on our energy bill. And then, like I said, because this is very much affecting Europe, because they are not getting the energy that they need. So their industries are going to see slow growth or falling growth. And when our major trading partners like the EU or the UK or the US sees a slowing of economic growth, that means the demand for our products are going to fall. So this is going to impact the Sri Lankan economy.
There's a question coming from Mr. Kaluarachi, one of the faculty members of Staffordshire University curriculum degree program, and he's asking what are the institutional and structural adjustments that are required to recover the economy?
Well, this is quite wide. And I think, if you've been studying in Sri Lanka and you studied economics or social science at some point, we've always learned about, having the structural changes. We need to have our productivity high. Sri Lanka's productivity, I think even in the textiles and garment industry, is not up to par as our competitors. So there needs to be some kind of investments. We need foreign investments coming into the country. This is what we need. Technical and foreign expertise need to come into the country. This is one important thing. And then there needs to be restructuring of the state-owned enterprises. This is very important. And maybe this is something also that the government is probably trying to push. There was some talk on trying to privatize the Sri Lankan Airlines. But then how all this go, we really don't know. Again, like I said, in a global environment, which is slowing down, like who wants to buy an airline when you expect global travel to maybe slow down because of a slowdown in economy? And then if you're buying the airline, that means you're also buying all this billion-dollar debt that you need to pay off. So this is something, again, like I said, this doesn't happen overnight. But then I would say the state-owned enterprises definitely need a restructuring. This has put a heavy burden on the government budget because you just hire people, you have to pay them. There is then the pensions that needs to be considered. We are also heading towards, we are going to have more and more of an aging population in the country. That means the government has to spend more on healthcare, more on pensions. So there needs to be, I would say, severe and drastic restructuring. And if you ask me, I think this is the right time for it because we have no other way to go. So even though it's very difficult, we have to make those decisions now.
Thanks, Karishma. And there's a question coming from Nalin, and he says, very interesting question. He's asking, in Argentina, when this whole area of privatization took place, once again, corruption came in. And then they had to retake back the privatized assets. And this created another huge challenge for the country. So a lot of people are saying that Sri Lanka must not go the Argentinian way.
Of course.
The question is that, how would you pan out this kind of privatization program?
I think Sri Lanka first needs to come up with a proper public-private partnership policy work, which the country doesn't have. And this is a weakness in many of the developing countries. So the regulations and the policy needs to be set out first, right? And then we have to have a justice system all cleaned up. Because if there is going to be corruption, it needs to be answered for. It needs to be able to, you need to be able to monitor it. So our policies need to be set up proper, which has not been done. So even at a public-private partnership policy, this PPP framework, which is, I think, I would say most of the developing countries are struggling with it, because most countries the governments don't want to give up on their state-owned enterprises. And when we have to privatize this, there's a lot more to think about on the structure of it, on the returns of it, on, who's going to oversee, who's going to, make sure there is no corruption happening here. So that I would say it's not, again, it's going to be a challenging process. And then with Sri Lanka also, with the privatization, we've seen that the trade union actions have been very strong over the past years. Some of the policy changes, some of the reforms that Sri Lanka had to take had been stopped because of trade union actions. So all these need to be, and I think people just need to understand that, some of the trade union actions you can't always keep pushing for, short-term kind of benefits in the expenses of our long-term recovery. So at the moment, it's going to be some short-term pain and hopefully go for a long-term recovery, so we don't fall back into this situation again.
Interesting question from Ryan, and he's asking, how long will it take for Sri Lanka to recover when, as we speak now, there are more ministers in the public sector than the actual efficiency that is required from a few? What is your view in terms of experiences from other countries on this policy plus, impact to increasing productivity?
The short answer will be, it will take a few years. I know people would like to hear, we are going to recover next year or the year after that or so on. But I do not see that. I see we are going to have at least some medium term, at least around 5 years. I would think, this is my personal opinion on this. It would take a number of years. One thing is because these couple of years would definitely test the political will of whoever is ruling the country, and will definitely test the patience and resistance of the population, the general Sri Lankans and Sri Lankan population. So there are a lot of fluid and moving, parts here. It's very difficult to say. And like I said, if you do not keep up to, a program that you agreed to, if there is a change on administration, therefore change of policy, this problem would keep on going. And just like it, Argentina is still not out of it. Venezuela is not still out of it. I think Zimbabwe is just kind of coming out of it. I've not actually studied it recently. But the importance is that whoever is ruling the country has to agree to a certain policy, agree to this, and then continue. Even if there's a change in government, you just need to continue with that kind of policy. And there's a slow recovery. So sometimes these kind of change of governments happen because people are not as patient. And of course, I don't expect everyone to understand what I just presented now, right? You all are MBA students. There are, I guess everyone who's attending this has a background of some kind of economic understanding and some kind of logical thinking, but you can't expect that from everyone. And so therefore, these kind of pressures build up. And like I said, again, these kind of civil unrest can build up. They would again demand for maybe a change of government, have to maybe start from scratch. Maybe, our lenders are not really in agreement with the new government. Then again, the debt restructuring can, slow down, or you have to start talking again. So there's a lot of things. So it's very difficult to say how many years, but I would say there are at least going to be a few number of years ahead of us, which are going to be challenging.
Thank you very much, Karishma. Very honest speaking. I think it was one of the best, very frank answers that many would always dodge, that you decided to answer. And I think that's really, really nice that, people were able to ask direct questions from you. It's actually an honor to have you on our program. We've had ambassadors, we have had global personalities out of different parts of the world. And today you come from a brilliant background of economics. And Ruth, can I hand over to to you to do the final honors.
Sure, of course. Karishma, thank you so much. You have spared your valuable time with us to share very valuable knowledge. I'm sure that our undergrads, our postgrads, and all our audiences, both here on our platform now and live on Facebook, would have immensely benefited from the knowledge that you have shared with us today. So thank you from us at APIT. And with this said, I would like to thank our students, our audience basically, who are our students, our well-wishers, corporate partners, and also our IT team for the technical support that they've provided us with. And as always, before we close, I would like to remind our corporate partners that we have an intensive internship program set out at APIT, and if you have any opportunities to do, send our way. So with this, I would like to end yet another insightful, interesting, and wonderful MBA Diary session. Thank you to one and all. Have a lovely day, evening, and night from wherever you are joining us from. Take care till we meet next time.
Thank you.
Thanks, Karishma.
Thank you.